Welcome to The Deep Dive, the show where we sift through your source material and really unearth those important nuggets of knowledge. Today we're putting on our analyst hats. This is Talk Tickers, our segment where we break down earnings calls.
That's right.
And we're diving into National Vision Holdings, Inc., ticker IYEYE, and their second quarter 2025 results. This call dropped pre-market August 6th, and, well, Street had some interesting reactions.
Yeah, definitely. So for this deep dive, our mission really is to cut through the noise, distill the key financial highlights, understand what management's doing strategically, those shifts, and then think about the market's response, which was a bit nuanced.
Okay.
We want to explore what these results mean for National Vision going forward and what's on the horizon for investors paying attention.
All right, let's unpack this then, because National Vision, they just turned in a Q2 that, on the surface, looked pretty strong, right? They beat the analyst consensus on both the top and bottom line.
Absolutely, yeah. We saw a non-GAAP adjusted diluted EPS. They came in at 0.88 cents.
18 cents.
Yeah, which was like significantly better than the consensus of around 12 cents.
Big beat there.
Huge beat. And revenue was equally robust, $486.4 million. That sailed past the, $470 million consensus. And it marks a healthy 7.7% year-over-year increase. Pretty solid.
And what's particularly striking, I think, are the underlying metrics here. We're talking comparable store sales. So existing stores up 6.5% or 5.9% on an adjusted basis.
Right.
And the adjusted operating income, a whopping 69% increase year over year. That drove the adjusted operating margin up 180 basis points to 4.9%. Those are some eye-catching numbers, no pun intended.
Yeah, definitely eye-catching. But what's fascinating here is while the initial pre-market reaction was a little bit of an uptick, the stock opened nearly flat the next session, and then it had kind of a weaker post-event drift, which implies that, okay, the numbers were strong, sure, but maybe the market was looking for even more proof, definitive proof of sustained margin expansion,
right?
Especially because the stock had already run up so much over the past year.
Good point. That context is key.
Yeah, management sounded, constructively bullish, but investors are still kind of watchful. Waiting.
Okay, so let's get into the nitty-gritty then. This quarter marked CEO Alex Wilkes' first time leading the call, right? And he emphasized this period of significant transformation and accelerated growth. Sounds like their initiatives are really starting to pay off.
It does sound that way.
Yeah.
And management, they attributed this ongoing success to a few key things. They talked about lifestyle selling.
Okay, what does that mean exactly?
Well, basically focusing more on the customer's overall needs, their preferences, not just, the basic glasses transaction.
Got it.
And then refinements in assortment and pricing. Plus, an elevated shopping experience, especially at America's Best.
Right.
And they said these actions directly fueled that better top-line performance and the operating income expansion we saw.
Okay, so digging into the customer segments, it's interesting. You see this divergence. Managed care customers, people using insurance, they delivered low double-digit comparable growth. That came from more transactions and higher average tickets. But what about the cash pay side?
Yeah, the cash pay segment, it's a positive comp growth, but only low single digits.
Okay. And
similar to Q1, that was mostly driven by ticket increases, not more people walking in the door. In fact, overall customer transactions actually declined slightly. 0.4%.
Oh, interesting.
Management noted that was partly a conscious decision. They didn't anniversary some deep promotion from last year. But still, that cohort is also seeing a 2% mix shift towards managed care. So the cash pay base seems to be shrinking a bit.
Right.
Which definitely raises the question, how does National Vision plan to address this going forward? Are they okay with that shift?
Well, that's where it gets really interesting, I think. They're not just letting it shrink passively. They're trying to, quote, control their own destiny. They're reinventing the America's Best marketing. There's a new campaign launching soon. Every eye deserves better. Plus, they're using this powerful new CRM platform, customer relationship management, to try and attract new customers and keep the ones they have, moving more towards personalized marketing.
And this ties directly into their product assortment strategy, doesn't it?
Exactly.
Because historically, only 20% of their frames were priced over $99.
Right, even though insurance often covers up to $130 or so.
Precisely. So now they're aggressively moving to have roughly 40% of their mix priced over $99.
Wow, double.
Yeah, and they're complementing that with designer partnerships, Lamb, Ted Baker, and new ones like Jimmy Choo and Hugo Boss.
Jimmy Choo at America's Best.
Right. So this isn't just about raising prices randomly. It's about better serving managed care and also those higher income cash pay customers, the 75K to $100 range, who apparently are opting into these pricier frames too.
So a real strategic shift upmarket, it seems.
Feels like it. Definitely trying to capture more value per transaction.
And beyond America's Best, you mentioned Eyeglass World. There's a turnaround story there.
Yes, absolutely. After a leadership change, it apparently had its best first half performance since 2021. Positive comps of 2.8%.
Okay.
And they even strategically modified the doctor model down in Florida to improve patient access and the whole experience.
And what about broader operational stuff, like behind the scenes?
Yeah, good point. They seem pretty disciplined there, too. They successfully rolled out phase 1 of a new ERP system that's enterprise resource planning for finance and accounting. That's a big undertaking.
Definitely.
They also settled the last of their convertible notes, about $84.8 million worth, which cleans up the balance sheet, de-risks it. And they're working with Accenture on a cost optimization strategy, even the potential hit from new tariffs. They say they've significantly mitigated that, and it's already baked into their guidance.
Okay, so it sounds like strong execution across multiple fronts.
Yeah, it really does.
So with all this momentum, this execution, it's maybe not surprising they raised their full year 2025 guidance. What does that revised outlook look like?
So they nudged up their net revenue expectations slightly. Now looking for $1.934 to $1.970 billion.
Okay.
Adjusted operating income is now guided to $85 to $95 million, and adjusted EPS, 1.62 to 70 cents.
62 to 70 cents.
Right. The capital expenditures was trimmed a little bit, $87 to $90 million. And it's worth remembering they have a 53rd week this fiscal year.
Ah, right. The extra week.
Yeah, they expect that to add about $35 million in revenue and maybe $3 million in adjusted operating income.
Okay. But they're still being somewhat cautious, aren't they? They're not like baking in all the potential upside from these new marketing pushes or the CRM just yet.
Precisely. That's a really important point. Their guidance assumes that second half traffic trends basically stay in line with Q2.
So kind of flat-ish transaction volume, maybe.
Yeah, acknowledging there's still macroeconomic uncertainty out there. And crucially, like you said, they have not yet put any potential benefits from the new CRM platform or the full impact of the new America's Best brand stuff into the numbers.
Yeah.
They want to wait for, concrete proof points that it's actually changing consumer behavior, which honestly shows a pretty disciplined approach to guidance, I think.
Yeah, it does. Manage expectations. So looking ahead then, beyond what's baked into the guidance, what are the key levers for growth? What should listeners be watching for?
Well, several things came up. Management highlighted their, quote, just scratching the surface on optimizing lens pricing.
Ah, lenses. That could be significant.
Huge long-term opportunity there, right, to drive higher average tickets. Also, the pilot they're running for Ray-Ban and Nuance products in about 50 stores, they said early results are super encouraging. So the focus now isn't if they should scale it, but how to scale it effectively.
Got it.
Store productivity is another focus.
Yeah.
They're balancing closing some underperforming locations, but also leveraging remote exam technology, which just passed like 1 million exams conducted remotely.
Wow.
Yeah. And interestingly, they mentioned doctor retention numbers were the best they've been in recent memory. Yeah. That's a strong operational sign, too.
Definitely helps keep the exam lanes full. And we absolutely can't forget the upcoming Investor Day, right? November 17th.
Yes. That's looming large. It's a major near-term catalyst. That's where they're expected to give a framework for multi-year targets, dig deeper into the brand strategy, talk more about that path to margin expansion.
So potentially a lot of answers the market is looking for.
Exactly. It'll be crucial for understanding their longer-term vision and, the potential for sustained value creation.
Sure.
Especially given how watchful the market seems to be right now. Okay, so boiling it down. We have a company delivering strong beats, raising guidance, executing on this clear transformation strategy. Yet the market reaction was, well, somewhat muted after that initial pop. What's the big takeaway for you, for our listeners, from this deep dive?
Well, if you connect all the dots, it really suggests that despite the strong Q2, market expectations had already risen quite a bit. I mean, look at the stock return, 126% over the last year.
Yeah, massive outperformance versus the retail ETF XRT.
Hugely. So investors are now clearly looking for concrete proof of sustained margin expansion and the tangible impact of these new initiatives, especially on traffic trends. That came up a lot in the Q&A.
Right. Show me the proof.
Exactly. The narrative is shifting maybe from just repairing the business to measured growth, but the market wants to see consistent proof points. They want to see that clear roadmap back to those historical operating margins, that sort of 6.5% to 7% range.
Makes sense. The bar is higher now. Okay. All right. This is the segment where we remind you very clearly nothing we say here is financial advice.
Not a recommendation. Nope. Purely for entertainment, spark some creative thinking. But given National Vision's results, this strategic pivot, the market's show me attitude, I've been cooking up a, let's call it, outrageous but plausible trade idea.
Okay. I'm intrigued. Lay it on us.
Right. With their focus on elevating the assortment, attracting higher income users, launching designer stuff like Jimmy Choo, they're essentially repositioning America's best upmarket. My idea, a long straddle option strategy, but with a twist.
Okay.
We're buying out of the money call and put options, expiring after their investor day on November 17th.
Okay. Out of the money.
Okay.
And specifically time for after the investor day. Why?
Because that investor day feels like a make or break moment for the narrative. If they come out and just blow the doors off, give an aggressive but credible long-term margin target, maybe back to that 6.57% level,
Right.
and they showcase stunning new branding for America's Best, a CRM rollout that really looks like it can capture those higher income folks, the stock could see a massive upward re-rating. That out-of-the-money call option would skyrocket.
Okay. I see the upside case and the put side.
Conversely, if the investor day disappoints, if the targets are too conservative, maybe the branding falls flat, or if the macro environment forces them to sound less optimistic about traffic, the market could really punish the stock, especially given that big run-up.
Right. Dump the shares.
And that put option would then pay off. The outrageous part is betting on that potential for a really significant move in either direction, driven by this single event.
So it's less about the Q2 results themselves and more about whether the investor day confirms or rejects this whole transformation story.
Exactly. We're betting on volatility driven by narrative confirmation or rejection. It's a binary event play, essentially, on their big strategic shift.
Interesting. Definitely lives up to the outrageous but plausible tag.
Well, that's the idea. So that wraps up our deep dive into National Vision Holdings Q2 2025 earnings call. We've seen a company, executing pretty well, delivering strong financials, and really strategically repositioning its brands for future growth, especially in managed care and aiming for higher income segments.
Yeah, their focus on lifestyle selling, upgrading the assortment, the digital stuff.
Yeah.
It appears to be gaining traction. But, like we said, the market is clearly waiting for more proof. Sustained margin expansion, consistent traffic. That upcoming investor day really feels like a critical juncture to watch.
Absolutely. And as always, this discussion is purely for informational purposes. It should not be considered financial advice. We definitely encourage you to do your own research, your own due diligence. So thinking about all this, what do you think is maybe the biggest hurdle or perhaps the biggest unseen opportunity for National Vision as they navigate this pivot, something for you, the listener, to mull over?